Good morning, everybody, and welcome to the ACEA webinar, Driving Change or Disruption, the Impact of Electrification Policy on the Van Segment. My name is Maria Linkova-Nijs. I'm Executive Head of Policy and Strategy at ACEA, European Automobiles Manufacturers Association, which is the voice of Europe's 16 largest manufacturers of passenger cars, vans, trucks, and buses. So when we talk about the transformation of the auto industry towards zero-emission mobility, the focus is very often primarily on passenger cars, overlooking the commercial vehicle segment. So today we decided to change that and talk specifically about the van market, which is subject to the same CO2 reduction emission standards, or similar standards as the passenger cars. However, this market has very distinct challenges, and as it operates under completely different conditions compared to the passenger car market, it also responds differently to different policy incentives. And so today I'm going to first, the structure of this webinar is very, very simple. I'm going to first give a quick overview of the market as a whole, where we stand when it comes to the transformation of the segment and the market share. And then I'm going to pass the floor to our esteemed speakers. So today we're joined by Rosanne Vanpée from the Transport and Mobility Leuven. And the Transport and Mobility Leuven, they publish quarterly updates monitoring the transformation towards zero-emission transport. And so today also Rosanne is going to talk to us, to give us a presentation about the van segment in particular. And then we're also very honored to have our colleagues from Stellantis and Ford, so obviously the largest manufacturers of light commercial vehicles, who are also going to give us the hands-on insights about the van segment, the customer preferences and the challenges that segment faces when it comes to electrification. So at the end, of course, we will allow some time for questions and answers. So please use the Slido to also type in your questions, and please indicate who you address this question to, so that we could do it as efficiently as possible and take as many questions as possible. So without further ado, I'm just going to start sharing my screen because I have a couple of slides just to give you the macro view of the sector and where we stand when it comes to the market share. So I hope everyone can see that. Good. So where are we when it comes to the van market in general? So the first maybe takeaway for this webinar is that the van market is still below the pre-COVID level. So the market in general, regardless of the powertrain, hasn't recovered yet from the 2019. And that, of course, also has an impact on the whole transformation pathway, because the weaker demand and the rising costs, of course, also constrain the industry's ability to invest and reinvest into the transformation. If we look at the registrations or sales of battery electric vans specifically, what we see indeed is that the market share has been fluctuating, as you can see here on the graph. But unfortunately, we don't see this kind of a hockey stick graph with a sharp increase in the market. And for now, the market share when it comes to new BEVs is still less than 10%, which is much less when it needs to be for the sector to meet the 2025 emission reduction targets of -15%. So the market share would need to be about 15-20%. And more importantly, we also have the 2030 target of -50% of CO2 reduction, which requires a 50% market share. So there's quite a huge gap or huge leap that the sector would need to do in just slightly more than 4 years, which we think is not going to be realistic. Now, what is the issue here? Is the market demand weak because there are simply not enough vans on the market? Well, the data shows us that the offer has been improving and has been growing steadily over the past few years. And at the moment, we have almost 80% of models available. So we can't really talk about the lack of supply or lack of available vans. But what we also need to take into consideration is, of course, the specific needs of that segment that is very much different from passenger cars. And I put here on screen just maybe two main constraints. So the first one is, of course, that the vans are a commercial tool. They need to be operational sometimes 24/7. So that means that they have much higher requirements when it comes to the recharging and refueling infrastructure. So fast charging, cheap charging, and available charging is really key for this sector, much more important than even for passenger cars, which obviously stay idle most of the time. And then also some of the customers, of course, are not willing to compromise on any reduced payload because of a bigger battery size, because again, this is a commercial tool and it is used to haul goods, and reduced space to do that is, of course, not makes the buying an electric van less profitable compared to the internal combustion engine one. Now, so this is just a summary of some of the challenges, and I know that also our other speakers are going to talk about them in more detail, so maybe I'm not going to dwell on this too much. So charging, things are improving. Again, we see that the infrastructure is improving, but still not as fast as it needs to, maybe to alleviate all the customer concerns. The high the total cost of ownership still in some cases remains high or higher than of comparable internal combustion engines. And since this is a very price-sensitive market, this is a really important point here. And what we also see in some cases, that there are policy incentives, such as, for example, in the Netherlands, that try to incentivize, of course, the uptake of electric vans, but they sometimes has negative spillover effects on the market as a whole. So in the Netherlands, the recent change of vehicle taxation has led to a collapse of the overall market, so a much less demand, which of course again has an impact on the production and on the competitiveness of the industry as a whole. And this is also one of the asks that we have for policymakers ahead of the review of the regulation, that the decarbonization targets also need to be reconciled with the resilience and competitiveness objectives. And that is also something that should not be taken lightly. And then finally, there are also some regulatory inconsistencies, again, that are linked to the weight of those vans, and changing weight obviously sometimes leads to higher regulatory requirements, which again deters the customers from going fully electric. So what does ACEA see as the way forward? Because, of course, we now have the ongoing revision of the CO2 regulation for cars and vans. And we're going to publish a detailed paper on vans, also based on today's discussion, next week on our website. So please do come back to our website to check what we'll have next week. But maybe just to emphasize that we think that the achievement of the current 2030 target for vans is not possible. Again, we're just seeing the market share, and we would like the Commission to consider the change towards a original impact assessment by the Commission, so around the 35% target, change in the average compliance mechanism, again extend simply the time for manufacturers to comply with the target, which is needed to, again, shield manufacturers from all those sudden shocks on the market and be able to maybe compensate weaker demand in year one by higher demand in year two. There's also a list of other flexibilities that we believe are needed for the van segment in particular, but all of this we cannot cover today. But again, I just invite you to check out our position paper next week. Now I'm going to pass the floor to Rosanne. Yes, Rosanne, the floor is yours.
Okay, thank you. Maria, if you
yes, I'll stop sharing,
then I will share my presentation. So welcome everybody. Some of you might already know me from the previous webinars. So I'm Rosanne Vanpée. I'm a researcher at Transport and Mobility Leuven, a research agency on transport and mobility. And every quarter we investigate the progress that is being made in light-duty vehicles with respect to their transition to zero emissions. Yesterday we actually published our third quarter report with the key performance indicators that monitor this transition. And so in the last webinar, I went over all the indicators. That is not what I will do today. So today I will focus on the findings that are particularly relevant for light commercial vehicles or vans, if you want. So I will just focus on that. If we compare the market uptake of battery electric vans, so what you see here on top is actually the share of battery electric vehicles in new vehicle sales. The top one is for passenger cars, the bottom one is for vans, and you see that actually for passenger cars, half of the countries are in what we call an EV dominant or mass transition phase. So what means that BEV uptake is really going in the right direction. This is not what we find for vans. Only 7 countries are in the EV dominant or mass transition phase. The Netherlands is on top only very recently with 83% of new vans being battery electric, and that is due to, as Maria already mentioned, the recent fiscal policy change in the Netherlands, on which I will come back to in more detail in a minute. But for the other countries, we see actually that a lot of countries are lagging and are still only in starter zone. So with shares of battery electric vans of 5% or lower, and also a big group of countries that is only in early adoption. So that's still far away of the targets that are set for the coming years. When we look at costs, so total cost of ownership, I've here published the total cost of ownership ratios for battery electric vans relative to comparable diesel vans in 5 key countries for the report of the previous quarter. So the quarter 2 2025 report and the one for this quarter. And what we see actually that TCO ratios have improved significantly. So costs have come down again, and this is mainly due to dealers lowering their purchase prices for the battery electric vans. But at the same time, we also saw a slight increase in prices of diesel vans. So that is actually improving the TCO ratio. And a special remark I have to make about Italy, because what you see here is that especially for Italy, the situation has improved, and that is because the Italian government has launched in September a new subsidy package for battery electric vehicles. But I have to make a big disclaimer. It's not available to everyone. So it's a subsidy, a purchase subsidy that is available for small companies that are domiciled in a specific functional rural area, specific functional urban area, sorry. That can get a quite significant purchase subsidy. So for those companies, battery electric vehicles in Italy have become much more affordable as of September. So we don't see it in the uptake numbers yet, but this is something that we will definitely follow up in the coming months to see how this incentive actually has an impact on the Italian market. In Spain, there was already a purchase subsidy the whole year through the MOVES program, which actually meant that purchase of battery electric vans in Spain are cheaper. Still, we don't really see an uptake there. For Spain, it's really not a matter of cost why companies don't buy battery electric vans. There are other reasons. I'll come back to that later, mainly infrastructure related, for which the purchase of battery electric vans is actually lagging behind. But first, something more about the impact of incentives. Maria already mentioned it. So in the Netherlands, there has been a change of fiscal policy. As of January, there's no longer an exemption for the motor vehicle tax for companies for fossil fuel vehicles. So this means that as of January, there is a quite significant tax that has to be paid for the purchase of a fossil fuel van. So you see the numbers here, so it's not a marginal amount. So obviously this has an immediate impact on the market, and we see here the impact on the share of battery electric vehicles in the Netherlands. It jumped up from about 8% in 2024 to 83% this year. So based on this figure, I would say it's a really effective, very good measure, and it helps the Netherlands to reach the targets that are set by Europe. But it has quite a significant side effect on the market when we look at total sales. Here you see the cumulative sales month by month for different years. So in gray, it's 2023, which we could consider a relatively normal year. In green, it's 2024, where sales went higher in anticipation of the measure. And then in dark green, you see 2025. So you really see a significant drop of the market, so really a collapse compared to previous year. In September, we already had 80% fewer sales, and compared to the, let's say, normal year, 2023, 73% less sales. So that really has a shock in the market. At the right, you see the sales numbers month by month, and that is maybe a little bit more reassuring, because you see that in actually the last months of 2024, companies really rushed to quickly still buy a diesel van, and obviously that has an effect in the coming months, because companies already have bought their new vans, so there will be fewer new sales in the coming months. So I would not immediately panic and say it has really crushed the market, but it has caused significant volatility, which is obviously something that policymakers should be aware of. And we will have to see the coming months how sales will now pick up. So I would not immediately be alarmed, but it is something we have to follow up carefully, how sales numbers recover in the following months. So then what are other reasons why battery electric vans are lagging in terms of uptake? So we partly investigated this ourselves in Belgium through a survey among companies, but we also collected evidence from studies from other countries. And to summarize, there are actually three main themes that always come up. Range remains an issue. On the one hand, it's range and anxiety, so fear from or reluctance from the consumers who are not really confident that it will be sufficient. And on the other hand, there is also mentioning of a real difference between the certified range and the real world range when the vehicle is fully loaded and is used in cold conditions. A second issue that is typically brought up are charging issues. And this is actually multidimensional. On the one hand, there's the public charging cost, especially on fast chargers that are really essential for companies. Fast charging is significantly more expensive than slower charging, and it can really increase the running cost of the battery electric vans. On the other hand, a lot of public charging spots are not suitable for vans. They are too narrow, or they are the cable is too short, or something like that. So a lot of public charging infrastructure is not adapted to van size. And also a third item is charging speed that is often mentioned. Typically, to charge an electric van to 80%, even in speed charging, it takes about 30 to 40 minutes, while companies want it to be much faster. So that remains an item. What we also observe is that especially small companies have difficulties to afford battery electric vehicles or to switch to battery electric vehicles. We see that the share of BEVs increases with fleet size. So it's really the smaller companies, which is actually the majority of the BEV buyers in terms of numbers, that needs attention or support when it comes to getting them convinced of battery electric vehicles. So in that sense, the incentives that the Italian government has implemented that specifically targets micro enterprises is actually accommodating this issue. Okay, so that was, I think, the overview of what I was planning to say about vans. Here you have, once again, the QR code to the full report that gives much more detailed insights. Thank you.
Thank you so much, Rosanne. And also, indeed, the report is also available on our website, on the ACEA website. So please also download it from there. Now I'm going to pass the floor to Pierre Cognet from Stellantis to give us the hands-on perspective on how OEMs see this transformation for the van segment, and what are the issues that you think are the most urgent ones. Pierre?
Yes, good morning all. Thank you, Maria. So I'm Pierre Cognet from the Stellantis Public Affairs team, looking especially on CO2 topics, and today trying to give you some insight on LCV specific issues, and trying to find ways to improve the situation and how to better perform in the electrification situation. If you can go to the next slide. Of course, I will probably repeat or illustrate better what has been said by Maria and Rosanne. The first one is on some side effect, just to show you what can happen when there are some inconsistencies between regulations. For light commercials, battery electrical vehicle is the preferred way to decarbonize. And when coming to the large van segment, so we are facing several issues due to the weight of batteries. As you may see there, when purchasing a diesel van, a large one, you can have access to a payload which is in the order of magnitude of 1.5 ton, while staying in the N1 category, meaning this vehicle is accessible to an ordinary driving license for passenger cars, and you have no additional limitation for that. If you want to go to an electric vehicle, then you will add around some 800 kilos of battery, which means if you want to stay in the N1 category, you have to limit the payload to 700 kilos only, which often is not sufficient for our customers. If you want to get the full payload, then you have to go to N2 category, and N2 category means in many member states specific driving license, implementing a speed limitation at 90 kilometers per hour, and mean a mandatory equipment with a tachograph that records driving periods on board. And of course, you don't want, as a customer, to get all that constraints which are not fitting with your activity. Typically, so if we want to improve the situation, we have to tackle that situation and to make a European regulatory framework that make it as easy for customers to drive an electrical vehicles as it is today for driving a diesel one. That's the first one. Second one, if you could go to next slide. It's a very basic one. When you want to go to electrification, you first need to get a daily charging point. The daily charging point has to be convenient, cheap, accessible. It should be as if every home and own parking place, and unfortunately, it is not the case. Even if you active housing, one point is that your building has to be pre-cabling, is today really by all co-owners and so on, so it must have the final connection. Looking at this slide, this is made in France by ACEA, which make a survey and track a KPI on how many collective housing are pre-cabled with and capable of accepting accepting a charging connection. Today, it is stated that only 5% of collective housings are correctly pre-cabled, while we should expect at least today 20%, and we should expect by consistency mean that 100% of collective on the ACEA website showing the blue dots and the red dots are showing the relative cost of charging and running a vehicle when you charge it on electricity or on diesel. If you are at a lower figure than 1, it means it's cheaper to run on electricity. If you are at a higher figure, it means it's cheaper to run on diesel. And what you can see is that in almost countries, member states, it will be cheaper to run on electricity if you have access to the home tariff of electricity. But it becomes cheaper to run on diesel when you have to charge on public and especially on fast charging, which is the case, and we have statistics for that in almost every member state. Our customers often charge on fast charging, and that's the right chart, which shows in dark blue in the day when it is charged on DC charging, so fast charging, and light blue when it is charged on AC charging, so slow charging. So that's today is typically the situation of a driver that cannot access to a night charging point and have to recharge during the day. And for that, we have to ensure that electricity price for these companies and privates that do not have access to home charging, there should be some compensation mechanism to make it cheaper for them to run on electricity than on diesel. Next slide. Last point I wanted to address there is the typical situation of a lot of our customers that we call intensive usage of vans. There was a study made by PFA, French Platform for Automobile. It was in 2023 in the context of how many customers would have to rely to an alternative to battery electrical vehicle. At that time, it was intended to address hydrogen. There was a split between all typical usage. You see deliveries, public procurement, transport of passengers. I won't enter into the details. This was split into 10 typical mission profiles. And associated to that, whether there was a charging constraint, typically a vehicle is to be run 24 hours a day, or whether there is no charging constraint, it means you can rely on a night charging. And that came to the situation, to the conclusion, if you could go to the next slide, please, that 53% of vans are used in the context of intensive uses of the vehicle, which means having troubles with a charge. And that should trigger for us to find alternative to battery. And typically, that's why we believe we have a real effort to make in order to find alternative to the battery electrical vehicle if you want to address this 50% of intensive usage in the future. That's where I wanted to go, and thank you for your attention.
Thank you very much, Pierre, and indeed a great presentation and great very clear overview of this decrease in the payload. I myself had no idea that it was so significant that almost half of the payload would need to suffer. So I think that's very useful information. Now, we also have Andrew Johnson from Ford with us today. So Andrew, I'd like to now invite you maybe just to give also an insights from your company on how you see the transformation and what are the main levers that you see that need to be used to accelerate electrification of that segment.
Thanks, Maria. Can I just check you can hear me?
Yes.
Very good. And maybe go to the next slide. Good morning, good afternoon, everybody. Just one slide from me, and yeah, there is a risk of a bit of repetition here, but maybe I'll try and summarize what we've heard today, and that would be a good way to then go into the Q&A. Although the focus here is on policy, right? I thought it was very important that we keep, well, it is very important that we keep customers at the center of our mind when we talk about policy in this space, right? As we've heard from Pierre, the commercial vehicle customers in the van market are very wide-ranging, right? They've got a very wide range of needs, and they do a lot of things with our vehicles, right? And they convert them and they add things to them. And it's a very complex landscape of use cases, and it's really important to recognize that the vehicle in many cases is the business, right? Is the commercial vehicle customer's business, right? And without their vehicle, they can't run their business. So when we talk about electrification, obviously we're helping our customers to electrify their businesses as well, but we've got to do it in a way that enables them to manage their business in an efficient and cost-effective way. And to that point, right, cost of ownership, and we heard from Rosanne, total cost of ownership is absolutely key here. And that comes in lots of different, there's lots of different factors that make up total cost of ownership. Obviously not just vehicle price or even running costs. And when we talk about electrification, obviously the cost of electricity in the different access points is absolutely key, as we've just heard. But it's also vehicle capability, as we've also heard, around payload, especially, the ability to keep the vehicle on the road, the ability to use the vehicle for the purpose that the business needs it. And we talk about something like uptime, right? How much of the time can the vehicle be on the road and in use, and therefore helping the customers to make money and to run a successful business. So this is absolutely central. And when we talk to our customers, obviously total cost of ownership is the prime decision point on how they're making decisions around what vehicles they'll have in their fleets. And because of the complexity and the variability in the customer base and in the use cases of commercial vehicles, right, choice is absolutely key. As we heard earlier, some of the bigger fleets are making some bold moves to electrification, and that's very helpful. And there are some fleets that lend themselves to electrification, things like last mile delivery, for example, where you've got relatively short journeys on a daily basis, lots of start-stop journeys, and electric vehicles are perfect for that. But there are a lot of other use cases that are not so perfect. And as Pierre said, there's a lot of data out there, a lot of statistics that show, probably more than half of the commercial vehicle customers and the commercial vehicle use cases are going to require more than one charge per day, right? And you can imagine the impact that would have on your business if you were using your vehicle to run the business. So we've got to give our customers choice, and there are different technology solutions at play here. It may not be that we jump straight to full electrification, or it may not be that all customers can jump to full electrification immediately. They may need to go through some different technologies on the way. So then when we talk about policy, keeping the customer center stage, because I think that's critical, there are some things that we've heard today, and I'll summarize, that we need to see on the policy side. And if you get policy right, it can have a really positive effect. We've seen that from some of the statistics we've seen today. But if you get it wrong, it can have a detrimental effect. Again, to Pierre's point, some of the regulatory complexities that we've fallen into are having an effect that it's making our customers' lives difficult as they transition into electric vehicles. So we need a holistic approach to this, right? From a policy perspective, not just the regulations around the vehicle, but the regulations around infrastructure, energy price, incentivization, etc., right? We need to have a full package of policy measures that are supporting the electrification in the light commercial vehicle space. To that end, there is a regulatory review going on, as Maria mentioned, and as I'm sure you're all aware. And we do see a need to bring the policy from the regulations from the vehicle side closer to where the customer demand level is. We heard earlier, customer demand at below 10% this year is way away from where it needs to be to meet the existing CO2 targets. So we need to bring the two things closer together to enable us to help our customers make the transition, right? You can't have a step change. The customers just won't be able to purchase the vehicles. So we're looking at the CO2 review, the regulatory review that's going on right now to see short-term and longer-term change in policy. And as I mentioned, it's really important, I think, that policy or those policies support a technology neutral approach, right? The transition to electrification for our commercial vehicle customers is a journey, right? It's not something that they can all take immediately. So we need to continue to provide different technology solutions to enable them to experience a plug-in vehicle. It may not be a full electric vehicle. It may be a plug-in hybrid, for example. It may be that they want to experience a hybrid vehicle. It may be that they have an ambition for a long-range plug-in hybrid or even a range extender. So there's a variety of different solutions that can help customers on the transition before they get to full electric. And we need to make sure that the regulatory landscape is supporting that, not hindering that. So overall, to sum up, as I say, we've got to keep customers center stage when we talk about the policy. The light commercial vehicle business is very different to the passenger vehicle business. The customer needs are very different to the passenger vehicle customer needs. And it's right that we reflect that in the policy actions that governments take going forward to support this transition. I think that's it from my side. Thank you.
Thank you so much, Andrew. And maybe I'll just stay with you, because now we've already started receiving some questions, and since you've been talking about customers, there's a question also about the charging behavior of the fleets that already switched to BEVs, where and how they prefer to charge. I don't know if you have any insights about that, the charging behavior of the owners of electric vans that you can share with us.
A little bit. Maybe I could take a bit of a step back as well. So we offer a tool to our customers called eSwitch Assist, right, which enables a fleet operator to, based on their current connected data of their existing ICE vehicles, to model what their business will look like if they transition to electric vehicles. And that's really where some of this data comes from, where we can see how many charging actions are going to be required for any given specific customer use case. Those customers that have migrated to electric vehicles, there's no one size fits all here, right? Every customer is different. So some people are working hard to make sure they've got infrastructure in their depots to handle charging on their premises. Others are using customer charge solutions, maybe on driveways if that's available. And obviously some are also having to use public charging where that's available at a significantly increased cost. So it's very difficult to give a simple answer there. It's not a one size fits all, as I say. It depends on specific use cases. Pierre, I don't know whether there's anything you'd like to add to that.
No, I think that's a good answer to that.
Thanks, Pierre. And actually, there are also quite a few questions addressed to you. I think that your explanation about the difference between N1 and 2 categories triggers quite a lot of questions, also about potential exceptions with regard to the massive electric vans that are also under the EU regulation 2019/631, and also what kind of share of your electric van is now currently registered as in an N2 category. So I don't know if you can maybe comment on that as well.
Just on the first one, relation between, it's not a derogation, it's just an extension of the scope of the CO2 regulation to these N2 vehicles that can fall in the scope of the CO2 regulation. Actually, this just allows a manufacturer to count in its own average these N2 vehicles, but these vehicles are still N2 with all the constraints that remain for the customers, and that's the trouble we've got. And the result of it, and well, I don't have exact figures, but what can I see is at the moment we are looking at the different share of electrical vehicles depending on the segment. We have small vans, we have medium vans, we have large vans. And what we can see is that in large van, the share of electrical vehicle is less than half. It is the one it is in the low, small and medium one, meaning we have a specific issue there, and our customers do not want to go to this N2. They have too many constraints for that.
Thank you. I don't know, Andrew, if you have anything to add also on that point, or?
No, I don't think so. I mean, we are seeing some progress on some of those associated regulations. I think there was some movement this week on driver license rules, for example. So there is action. It's recognised that this is a fallout from the electrification. But as Pierre said, there's more to be done. This is an unnecessary barrier for some of our customers to make the jump.
Thank you. I know that there's quite a few questions, of course, about the targets, weakening the targets, or reducing the market certainty that. And here, I mean, commenting also on behalf of industry as a whole, I think it's not that we, ACEA says the targets should be weakened. It's the market data, the market reality, which you have just seen also in this presentation, which simply shows us that the current uptake and the current trajectory is much slower than anticipated, and it is highly unlikely that then the targets set by the regulator several years ago, maybe under different assumptions, would be met. And so definitely for vehicle manufacturers, that doesn't mean the market certainty, it means the penalty certainty, to be very, very blunt here. And that, of course, requires some action, because if the industry has to either reduce production or pay penalties, that really decreases its competitiveness and its ability to reinvest into transformation. And as we just heard today, it's not a matter of supply, so the supply is there, but a lot of other things need to be into place, the enabling conditions, so the infrastructure, the electricity prices, the grid stability, the payload, so the regulatory inconsistencies need to be sorted out for the transformation really to happen. And this is also something that is outside of the control of vehicle manufacturers, and this is where also we need much more stronger action indeed to accelerate electrification. But in the absence of all those conditions, the industry is left with the only actor with the responsibility to, and with penalties, which we believe just simply does not work and doesn't help drive the transformation in the long run. So I hope that clarified a little bit where we stand here. I don't know, so Andrew, Pierre, feel free to add if you feel I've missed something.
No.
Okay. Just looking at the questions, I think there was also a question to you, Rosanne, on looking at ACEA data on the fuel types. Yeah, are you happy to take that one?
Yes, so I saw that there were several questions. First of all, regarding the TCO. So how does the dependency on fast charging influence TCO? Actually, thank you very much for that question, because I maybe have to clarify about the TCO ratio. So the TCO model that we use assumes depot charging. So that's the lowest electricity rate. So indeed, if you would apply fully fast charging or only public charging, this will have an impact on TCO. So this is something we can model, and maybe it's a good idea for the next report to also visualize this to see how the different charging rates impact the TCO. So the current model is built based on depot charging, of which we are aware is not always possible for the companies. It's mainly relevant for the larger companies, but not necessarily for the smaller ones. A related question maybe is the question on the electricity grid. So there's a question that in the Netherlands, the electricity grid is a constraint, and that companies are not able to get their charging stations approved. And what is the status in the rest of Europe? So there are indeed several countries that face a similar problem. For example, in Spain, as I said, although the TCO ratio in Spain is positive, we don't see an uptake of battery electric vans, and this is mainly due to the problem of charging infrastructure, that companies can have difficulties to get their charging infrastructure approved because of grid constraints. The government is planning to invest and is investing in upgrading the electricity grid, so there are efforts being made, but of course, these are long-term investments. It takes time, and it takes time for this to materialize. So yeah, that's why it's lagging the uptake of the battery electric vehicle sales. And then I think there was one more. So looking at ACEA data on fuel types of new commercial vehicles. Vans are electrifying much slower than medium trucks. Could you explain why? That's a bit harder for me to explain because I haven't looked myself into trucks. My guess would be is that when we look at the market of vans, the majority of this market, well, at least in Belgium, are small companies like your local plumber, small businesses who have difficulties to make the transition to battery electric vehicles because either they do not have access to a charging station or they face range anxiety and so on. While trucks are mainly operated by larger transport companies who have the financial means or at easily more financial means to switch to battery electric vehicles. That would be my guess, but as I said, I didn't investigate that particular question, so
maybe
other reasons as well.
Maybe I could jump in. Obviously, bigger fleets and certainly haulage companies, there's some value in decarbonisation in itself, right? Their customers will have some expectation or demand on low carbon mobility. It's different for those small companies though, right? They don't have the intrinsic value in decarbonising. It needs to manifest itself in a total cost of ownership reduction, or the balance needs to go the right way for electric vehicles. So the overall ambition for businesses and fleets to decarbonise is helping the transition, right? But that is only going to go so far when we get down to those small companies.
Thanks, Andrew, and thanks, Rosanne. I think we're already over time, so I unfortunately need to cut off us here. I think we've covered most of the questions, and for those, if you feel your question hasn't been answered, feel free to, of course, get in touch with us, and we'll try to respond to you in writing. But I'd like to thank all the participants, all the speakers, for taking the time to talk to us and really explain the specific circumstances of this market, which is often overlooked when talking only about passenger cars, but is still a very important market because it's also critical for the economic development, from plumbers to construction workers. I mean, they all depend on that segment, and just bundling it with passenger cars or ignoring its difficult situation will further exacerbate the uptake. So, of course, we'll be creating more opportunities also to talk about the van segment as ACEA. So if you're interested in this topic, please also continue following us, and we'll be bringing you more information on that. Thank you, everybody, and have a lovely day.